Hi. The question we want to ask today is whether we need to become more optimistic about Asia. China is in a deep funk. Taiwan and Korea are in export recession, and Japanese consumers have been struggling with inflation. But these have been the trends for a while now, and there are now reasons to argue that they might be turning, with China perhaps being the furthest ahead. Now, particularly in China, we don't think this is a fundamental change, or indeed one that's driven by policy. But even temporary stabilisation would be important after the downward spiral of recent months. So let's start with China. We've been talking for a while about deflation there, with rising real rates and signs that the economy is effectively falling into some sort of liquidity trap. Now, we don't think there's anything really to suggest that China is moving past all of this. The big reason for overall deflation is the gap between aggregate demand and supply, and that's been caused by the property market collapse. The real estate cycle today remains as bad as ever. Property sales continue to fall sharply in July, and real estate debt and equities continue to trade near the lows. None of the measures the government has used over the course of the last 18 months or so to stabilise the market have yet shown any sign of working. However, PPI inflation in China often follows broader trends in the US dollar. The fact that the dollar has weakened in September thus points to PPI inflation starting to rebound and perhaps getting back to 5% growth by early 2024. There are tentative signs of this turnaround already, with PMI input prices moving up over the course of the last couple of months. At least for now then, the worst in China might be over. Next, Korea and Taiwan. Apart from commodity prices, broad dollar trends also matter for export growth in Asia. Exports tend to be weaker when the US dollar is strengthening, and vice versa. So that the dollar isn't quite as strong as before should help the region out of its current export recession. In addition to the excitement caused by AI or superconductors or whatever the current excitement of the day might be, this might be what the equity market is also starting to sense, with stock markets in both Korea and Taiwan pointing to decent recoveries in exports by the end of the year. Now, in contrast to China, there is as yet no sign of this rise in actual data for either economy. Business sentiment in July in both Korea and Taiwan remained weak, and there was no lift in actual export growth from the early data published by Korea for last month. So for now, this improvement in exports that's being priced in remains a future risk. For these economies, the thing to be watching for now is whether the domestic economies hold up in the third quarter of this year. It's domestic services demand that has been supporting growth while exports have been weak over the course of the last 18 months or so. If services hold up for a bit longer, they could provide a bridge to when exports do start to improve, a sort of handover that would be important for central banks in both Korea and Taiwan. Finally, Japan. Japan is also benefiting from the services recovery being seen in Korea and Taiwan, with consumer confidence in all three economies rising quite strongly over the course of recent months. Now, as an aside, this isn't something that's happening in China, with just released data for April, and only up to April, showing consumer confidence there falling back to the cycle lows. Back to Japan, however, the rise in consumer confidence is potentially of structural as well as cyclical significance. That's because it's happening even though inflation expectations remain high. Consumer confidence is usually inversely correlated with perceptions about prices, which is understandable when nominal wages never move up to keep up with higher prices. The rise in consumer confidence since the beginning of this year thus does start to look a little bit different, hinting at just the sort of positive wage-driven reflation cycle that the BOJ has been hoping for so long. Now, it does of course take more than a couple of data points to show a structural shift, and for now there continue to be reasons for scepticism. In particular, labour market data don't look hot enough to be lifting nominal wages, with the labour market tightening but still ever so slowly. It could be that price expectations are becoming more important for the labour market rather than just raw demand and supply. And anyway, The rise in consumer confidence is unusual enough that we think it is worth paying attention to. So, where does this all leave us? First, for the first time in recent months, there are reasons to think that China's cycle might stabilise. Now again, that's not because of fundamental reasons or even because of policy, but given current expectations around China, this would be an important shift. In Korea and Taiwan, we are still waiting for a turn in exports, but that is something to have on the roadmap for the fourth quarter of this year, and if it does occur, would have policy implications given the current strength of services economies in both Korea and Taiwan. In Japan, it's too early to believe in a structural break in consumer confidence just yet, but that we can even talk about it as a possibility does show how far Japan macro has come. Now, as before, for more analysis, charts and data on the economies of China, Japan, Korea and Taiwan, please sign up at our newsletter and website at eastasiaecon.com. Thanks very much.